Hello guys, how are you doing guys? It's me Abdi, HusniFX team. In this video, I'm going to show you something very important in technical analysis when it comes in top-down analysis. I will show you some simple tips or way that you can make analysis from high time frame to the lower time frame in order to detect the high and lows, and also getting the data history of the previous days in order to get the accumulation data. So before I go continue explaining and showing you how it works, I would recommend you to share the video, and also if you are new in our channel, please subscribe, and also share with friends those who are interested. So let me show you this information. And number one, we have to understand how the market moves. Okay, the market moves in a sideways, uptrend and downtrend. When I say sideways, sideways means the market is moving in equal ways, how you can see on the screen right now. It means that the market has no any power, and there's no there's no way that the market is moving up or maybe down. So the market has no power, and power of bullish or power of bearish. So this is one ways that the market moves, and it is called sideways. So in a sideways, it means the market has no power for bullish or power. So the power of the market movement is equal. So it is also called consolidation or ranging area. The other way that the market makes a move is bullish. In the bullish, we call it uptrend. How does the bullish market move? So it moves always. It goes up, then reverses back, then goes up, and then reverses, and then goes up, and then reverses, and then goes up. So it always makes high, low, high, low, high, low. So this is called the uptrend. This is the second way that you can understand the market moves. So the market moves sideways and uptrend. The other way that the market moves, the other way that the market moves is downtrend. The downtrend, when it comes downtrend, means the market is trending down. The market is trending down, and then goes up, then trending down, then goes up, trending down, then goes up. So it makes low, high, high, low, high, low. So that is how the market moves. So if you understand that that this way is very easily to understand the trend of the market, I hope you will understand how to detect the trend very simply. We will use a simple moving average in our trading view. EMAs EMA 200 and also 221. We will use both of these moving averages to detect the trend. So now let us go on the trading view and then see how I will detect. So in this way, I'm using one moving average, one indicator that is called BJEMA, because you can get multiple indicators in one time. So I'm using 3 moving averages right now. So I will make it close, and then this one I will make it 8, and this is the medium which I will this is the first, sorry, this is 200 and this is the 21, and this is also the 8 moving average, which I can simply take or not. So now you can see this setup, and let me show you here what I will use. This is what I don't like. Okay, so then I go there, or even I would like to remove them, this moving average, and then I would like to show you guys how you can have your 2 EMAs like this one. We can have double EMAs, it's okay. Let us go and check. Yeah, we have 2 EMAs or double EMA. Let us go and check. This must be 200, color must be yellow, and then have that one. So that is the 200, the yellow. So now let me have also EMA to 21. This is EMA 21, and then the color must be green, full green. And then let me have this tick number. So now what I will do is to detect the trend. As you can see, right now we are in gold. Gold is bought, and exactly if we want to get the trend, I would always like to use the 4-hour. The 4-hour is clearly showing you where the market is trending for sure. So now you can see that this market here, you can see that it is trending down, and you have a cross, this cross. You can see this cross, guys. You can see this cross where the yellow moving average and also the candles and also the green EMA 21 is crossing. There is where the market is trending. So what you should do is, what you should focus on and keep eyes on is you have to always look that the candles are below the yellow moving average. You see that yellow moving average. When you go at 4-hour time frame, check that the market is below the moving average, and when you see this condition, the market is downtrend. The market is downtrend. Yeah, why I'm using the smartphone is that most of the people, they use a smartphone today, and it will be very easy for you guys to make analysis using the smartphone. And this is top-down analysis, which will help you better, and you may have a nice technical technique to identify the market and make your own predictions. So guys, when you see like this condition, the market is uptrend, you can see that the price has crossed it above the yellow EMA 200, and then you can see the price is rising up. So this condition is uptrend. This condition is uptrend. So now you know how to detect the trend. If you wanted to filter out the trend, then you can go at 1 hour to filter out how the market is now moving in lower time frames. What I told you was that the market was a downtrend, and you can see that the market is still going to the downside, but something that is not a good is just going in. Yeah, something that is not good is going in lower time frames. But what you can see is right now that the two moving averages is now making a cross, which you should focus on, as the market is still trending down. The market is still trending down. So that is how you can find out the trend of the market. So what you need is right now, how can I find my high and low? There are several ways you can find out the high and low of the market, but when it comes in top-down analysis, you should always go on higher time frames like monthly, and then find out the key zones of the market, and then that is how you should focus on to find out the high and low of the market. Number one, you have a horizontal line on the trading view, then take and then place it there. Oh, the color is white, sorry, let me change it into black, and you can see that there is the high. I hope you can see where the high is written on and where the low is written on. It's very simple to get the high and low of every time frame. So the monthly time frame, we have the high and low already there, and you can see that there is the low. So what we need is the key factors. That key factors gives us more confirmation in order to take decision of sell and buy or follow the market structure. So right now we have the high and low of a monthly. So now let us go on weekly and find out the high and low of weekly. So we are on weekly time frame right now. You see the high and low of weekly already. So when you have the high and low of, so every time we have a high, it means it is resistance, or what we call the distribution area. So that is, so let me have a name written on every time frame, then you should. Okay, I have a problem. Okay, now let me show you. Oh, I think it's very hard to, yeah, it's okay, I have it now. Yeah, I have to read the text. And so monthly high, You can see that is a monthly high, and this will also be monthly low, and that's monthly low. So you can see right now the monthly resistance area and the monthly support area. Right here we have weekly low. So this is the swing low, because those who trade or hit, or maybe those who hold trades weekly, should focus on this level. It's a weekly low, guys. So that is how you should focus on finding the high and low of the market of every time frame. You should focus on starting from the high time frames till you come to the lower time frame, or where you are just targeting to get your trades. So this is weekly high. This is weekly high. So now you know how to find out the high and low of the market. So when we go monthly time frame, then you can get the high and low of the market so clearly. Right now we know how to detect the high and low of monthly and weekly. Let us go on 1 hour. Yeah, this is 1 hour, guys. This is 1 hour high and low. And when we are below weekly, like daily time frame, so right now we are in a daily time frame, in, not out. So if we are 8 hours, 4 hour maybe, or let me say 1 hour, 3 hour, 15 minutes, or any time frame which is below daily time frame, we are still in daily ranging zone. So we are in a still an area or region where the market is still is bouncing or going up or down. So 1 hour is really very important for filtering the time frame and also the trend of the market. So for the high, you see there is the high, and also low here is the low. So you are not just confusing, and you can see my screen, there is a high and low. Every time you can see that there is resistance and also the support. So I hope right now you can find out from now on the high and low of the market. You have to also apply that the high is always the resistance and low is always support zone. You can also call the distribution zone the high. You can call the distribution zone, this is distribution zone, and this is accumulation zone. So some guys say this is resistance, and we also say this is support zone. So every time you have a high, it is distribution zone, or you can call resistance zone, or you can also call accumulation zone or support zone, support area. I hope this is very helpful, my friends, those who are watching. I hope this video is totally long right now. I will record another video. I hope you will watch the next video carefully, and if you don't understand what I've explained in this video, I hope you will understand. Please watch it carefully and repeat it over again in order to understand what I've explained in this video. I'll wait you in the next video. Goodbye.